Welcome, dear traders. As usual, we start the day with a recap of the Asian session. We are going to discuss the Volatility Index as well as the trajectory of the US dollar. Apart from that, we will also tell you about the trading floors in Japan after the long holidays. And you will also find out the bullish factors for the Australian dollar. Let's start. The main US stock indexes ended Thursday on a pessimistic note. The Dow Jones and the S&P 500 indexes declined by more than 3%. The Nasdaq index shed almost 5%, logging the largest one-day drop since June 2020. Stocks' relief rally on Wednesday faded rather quickly. Investors are again getting rid of risky shares. Stocks of Alphabet, Apple, Microsoft, Meta platforms, Tesla and Amazon incurred the biggest losses. Perhaps speculators perceived skeptically Jerome Powell's statements about the possibility of a soft landing. Besides, many analysts believe that the Fed was very late in addressing inflation. For this reason, Jerome Powell's comment, in which he ruled out a rate increase by 75 basis points, might be taken with a pinch of salt. Apart from monetary policy tightening, there are plenty of risks for the economy. The geopolitical situation in Europe remains tense. Energy prices are soaring. Lockdown in China may lead to new supply chain disruptions. And last but not least, the yield on the 10-year Treasury bond continues to rise. To grasp the degree of market uncertainty, it's necessary to look at the Volatility Index, Wall Street's so-called fear gauge. Since yesterday, it has already jumped by 33 points, while its long-term median is around 17.63. The US dollar quickly recovered after falling by almost 1% in the previous session amid a spike in demand for safe haven assets. On Thursday, it climbed to 103.93, its highest since December 2002. Over the week, it has gained 0.35%, although the greenback has weakened slightly after the FOMC meeting. It's now growing steadily. Besides, traders priced in a rate hike a long time ago. And to this end, analysts predict a more gradual rise and a wide range for the US dollar. The Fed's measures to curb soaring inflation will only fuel a rally in the bond market and boost the US currency. There is no doubt that the US dollar will edge higher, logging the fifth consecutive week of gains. However, its trajectory will be more clear after the release of the non-farm payrolls report. If non-farm payrolls data is strong, the Fed will have one more reason to tighten monetary policy more aggressively. The greenback is likely to hit new highs too. In the Asian session, it started consolidating in the range of 103.36 and 104.06. At the time of preparing material for this video, it was trading at 103.56 against its main rivals. The US dollar will exert pressure on the yen as long as investors avoid risky assets. It's clearly seen that in the Asian session, with the US dollar rising against the yen, trading floors in Japan reopened after the long holidays, and Japanese shares stumbled to their lowest in 7 weeks. A sell-off on Wall Street was not the main reason for the drop. Market participants were disappointed by data on consumer price indexes, which showed an acceleration in inflation. In April, consumer prices rose to 2.5% in the yearly terms, from the previous figure of 1.3%. However, the core consumer price index, which excludes food and energy, was up by 0.8%. A modest increase confirmed the Bank of Japan's assumption that the external factors are fueling inflation in the country. If compared to the previous indicator of 0.4%, the situation looks less optimistic. Yet it will hardly force the Japanese regulator to abandon its ultra-loose stance. The widening rate gap has already helped the US dollar strengthen against the yen, and the Japanese currency also became less attractive as a safe haven asset amid optimism in the Eurozone stock markets. As a result, the dollar-yen pair rose, as expected, to a new intraday high around 129.75 yesterday. The US currency maintains its winning streak against the yen for the 9th week in a row. During the first week of May, the yen depreciated by 0.46%, and the pair again approached the 131.25, the 20-year high of the last week. In the Asian session, it continued to grow, moving upwardly within the price corridor of 130.07 and 130.80. At the time of preparing material for this video, it has already reached the level of 130.43. Market participants are still digesting an unexpected rate hike by the Reserve Bank of Australia. However, inflationary pressure is mounting due to supply chain disruptions and a growing demand for commodities. So, Reserve Bank of Australia policymakers stressed the need for a series of rate increases. At the same time, the regulator said that the economy is quite stable and the labor market is close to full employment. After the Reserve Bank of Australia raised the interest rate more than expected to 0.35%, the Aussie halted its 5-week decline against the greenback. Rising oil prices also bolstered the growth of the Australian currency. Over the week, the Aussie has added 0.6%, retaining an upward movement in today's Asian session. It's moving in the daily range of 0.7065 and 0.7132, as the bullish momentum is weaker today. At the time of preparing material for this video, the AUD USD pair touched 0.7085. And that's all for today. We hope you are holding only profitable positions today, and we will be happy if you have opened some of them thanks to our video reviews. Keep abreast of the latest market news with the InstaForex TV channel. See you in our next release.